What's going on YouTube? Mike here, back again with Renegade Forex, and in today's video I'm going to break down an 8R trade that I took today and show you why I took it and the confluences that aligned for me in order to enter in this trade. I'm also going to talk to you about how I see this on a consistent basis and how you can use this to pass prop firm challenges, because if you're risking 1% per trade on a trade like this, then that means you gain 8% when you win, and that's all you need in order to pass most prop firm challenges. So I want to show you today how you can find these on a consistent basis and how you can take advantage of trades just like this. But before we get started, make sure you subscribe to the channel and turn on your notifications, because I have videos just like this every week coming out full of value, talking about how to trade smart money concepts, refined supply and demand, and mindset surrounding being a consistently profitable trader. And check out the resources in the description below this video, because just like I'm doing right now, I also have a VIP service where I do this breakdown for every single trade that I take, winning or losing. I also do daily analysis, weekly outlooks, weekly recaps, and then daily recaps to show the potential trades that you could have taken during the New York session of trading for whatever pairs I'm watching. So definitely a valuable service if you want to get like a market commentary / mentorship type of experience. Be sure to check the links below. Also, one last quick shout out. I'm in the process of making a course on how to trade smart money concepts. So be sure to check the links in the description below for more information on that, if you want to learn how to do exactly what I'm doing in this video on a consistent basis. So without going on any longer, let's go ahead and get started with this video. So today, March 21st, 2023, I actually took a trade right here highlighted by the risk to reward tool on TradingView on AUD USD. And I also have the timestamp screenshot from my broker, just showing the entries and the entry time and date and the entry price as well. And so I know there's a lot of people that say they take trades like this, but then they can't actually like prove that they took the trade. So I just want to be like really upfront and honest and show that in this video here, just to, in case there's anyone questioning that. I like to be authentic with my videos and with my trading and show that like this is actually a, this is actually real for me and I really am doing this. So I want to break down this trade and why I took it and just show you the power behind using smart money concepts and refined supply and demand. And let's go ahead and just dive right in and get started. So you're looking at the 1 minute chart. Basically, this is taking out this position here. It was right during the New York open. So actually right at the entry, right around the entry area was the actual New York Stock Exchange open at 9:30 New York local time. Prior to that, I had actually sat down somewhere in this area here, usually about 8 o'clock New York time, which is 6 my time. And so somewhere in this area, I had actually sat down and did my analysis, which I'll show you in just a minute. And I just want to show, before we actually like break down the trade, I just want to show the power and the speed at which these trades happen. When you're right using smart money concepts, you are right. And there is like no question about it. So let's go ahead and just take a look at the 1 minute chart here and the speed, and then I'll go ahead and go into like actually breaking this down and why I took it. So right at 9:30, I think this is actually like right at 9:32 New York time, you have this 1 minute candle right here that actually wicks this 1 minute supply zone, which is drawn out with this gray box. Also, if you're into refining and refining your supply zones down, you could have also used this. I know there's going to be people that say, well, why don't you use this supply zone? I'll get to that in a minute. But you could have also seen that it actually did technically mitigate this one little tiny 1 minute candle. But for the sake of this video, the sake of my trading style, to not drive myself insane, I always just use the extreme of every leg and use the extreme supply zone, because that's going to offer the highest risk to reward. And it's also going to offer the most consistent setups where I'm not trying to actually trade each little tiny supply zone and get my stops run through. So right at 9:32 a.m. New York time, this wick wicked into this supply zone, and it then had an aggressive sell-off to clear an old 4-hour low. And just to show you, kind of how fast these trades happen, I think this is only about like 15 minutes or so until it actually hit the low. So, okay, this is 33 minutes, 33 bars on the 1 minute chart, 34 bars on the 1 minute chart means 34 minutes. And so from the point of entry right here, all the way down to actually, taking the majority of my profit at this low, this was only 34 minutes. 34 minutes to gain 8% on your account. If you're risking 1% per trade, which is totally reasonable, I do this with every trade that I place, whether it's with my own accounts or prop firm accounts, prop firm challenges, funded accounts, whatever you want to call it. I usually risk 1% per trade. I know that there are a lot of people that say, well, that's way too much, and I only risk 0.5%, only risk 0.25%. Whatever you use is totally fine. I'm speaking from my own experience. This is not a recommendation. This is just my experience and my trade plan that I risk 1%. And so in this trade, holding the full volume down to this low, this is actually a little bit over 8% gain. And so as many of you know, most of the more common prop firms require that you make an 8% gain in phase one and then a 5% gain in phase two. And so this right here is something that I see on a pretty consistent basis between a 1 to 5 and a 1 to 10 risk to reward trade. And so something like this, if you took this in your challenge, you would literally pass prop firm funding challenges in one trade. And that's the power of using smart money concepts, is very high risk to reward trades and very high risk to reward setups on a consistent basis. This is not like once a week or once a month or anything like that. I would say on average, I find, or at least see, I may not actually be in it every day, but at least every day, at least one time a day, I see at least a 1 to 5 risk to reward setup. And on days like today, really good days, there are 1 to 8, 1 to 10, and even sometimes higher risk to reward trades. It just depends. So that being said, let's go ahead and actually jump into breaking down this trade and why I took it and kind of the confluences that allowed me to predict this trade accurately and to benefit from the profit. So in order to do this, I need to actually jump up in time frame and paint a picture for you. And I'm going to do that starting from the daily and go down through my multi-time frame analysis all the way down back to this 1 minute chart. And so yeah, hopefully you enjoy it. Hopefully you find some value. Like I said earlier, make sure you subscribe and turn on the notifications because I have videos like this coming out every week. So let's go ahead and start our analysis. So if we jump up to the daily on AUD USD, can jump back here. I'm going to go ahead and just delete this, get it out of the way. This is actually all stuff from my daily analysis channel. So I'm just going to delete that in the VIP section. That's actually all from my daily analysis in the VIP section. So I'm just going to get rid of this really quick and clean it all up. And you'll see these on a lower time frame. I'm just going to leave those there so I don't lose my spot here. And what do we have? So we have a clear bearish trend on the daily chart. And we can see that the price action actually rejected a daily and weekly supply zone up here. And since that point, we've actually been in a bearish downtrend. So we have a failed higher high, followed by a daily change of character, retracement back up into the zone. Price rallies down and continues the bearish downtrend. We also have then a daily break of swing structure right here, followed by this low, retracement, daily break of structure again, retracement back up into the zone within the last 2 days or so. And so this is a daily supply zone where you can see price is actually leaving today. As I'm filming this video, this candle is actually leaving this supply zone, and I'm capitalizing off of part of this move on a lower time frame. So now that we have the kind of the daily picture painted, let's go ahead and drop down to the 4-hour. We can see here price becomes a little bit easier to read and understand. This is that same daily supply zone in this box here. We have a sharp sell-off, retracement back up into it where price taps, gives us a 4-hour change of character, retracement back up into this zone to mitigate this buy to sell candle here. Let me zoom in really quick and just go over that one more time really quick. So we have a retracement, rally up, failed higher high. At the time of this failed higher high, we are actually wicking that daily supply zone. And then we have a sharp sell-off that causes a 4-hour change of character. At which point price trades back up, retraces into this zone, and mitigates this buy to sell candle here. And then after the mitigation, price continues that trend down. And now our expectation is that over the next week, couple days, at least over the next week, price is going to continue the bearish move down. And at some point in the future, it's very likely, or at least our expectation, that price would continue this overall trend and take out this daily low. So on the higher time frames, we are trading basically a pullback, reversal right here, and a continuation. And on the lower time frames, we're getting in on the continuation of the higher time frame trend. And our expectation is that eventually it's going to hold down here. Now, I'm not necessarily always holding trades that long. I actually just scalp on a lower time frame and take my, I use different technical levels to take my profits. But I do, in this example and many other examples, I do leave a small partial running just in case that price does actually continue down in my favor. That way I don't close out all of my profits too early and get myself out of a really good trade. So that being said, let's go ahead and drop down to the 15-minute now, where it will then become a little bit clearer on what it is that we're actually trading. So as you can see, this change of character on the 4-hour is actually a break of structure on the 15-minute down at this zone below, at which point price trades back up and mitigates this 15-minute supply zone, which I have refined to this candle right here. You can see price actually trades into this zone 3 different times before selling off. And this was actually last night, so March 20th. Obviously, you're going to be watching this at a future date and future time. So March 20th, 2023, in the afternoon of the New York session, price is trading into this supply zone to mitigate it and actually taps it 3 different times. So at this point last night, what I was expecting was that price was actually going to come back up and clear out the stop losses that are above this, because retail traders are looking at this as a resistance zone. So let me just mark that really quick. Let me just annotate it here. And you can see 3 equal hits above here. And usually this indicates that there is going to be quite a bit of stop losses right above that, because retail traders are trading resistance here. They've either entered in somewhere, somewhere in this area and placed their stop loss right above it. And this is a good sign for us as smart money traders as to target this liquidity and move with the market. And so I had kept that in mind through last night doing my analysis, and woke up this morning with the expectation, or at least not necessarily the expectation, but the assumption that we were going to trade back up into this zone and wick this higher time frame supply zone one more time before selling off. And so when I sat down to trade, it was right around in this area here, somewhere in this zone. Let's see, it would have been right around these 2 candles right here is when I was actually sitting down to trade. And so we can see that at this point in time right here, we have a change of character right here, which to me symbolizes that at least this swing pullback from this high to this low is going to change, and price is going to come back up into this zone and mitigate it, if not begin a reversal and trade up higher. And so at this point in time, I knew that at least price was going to trade up into here and either A, continue to sell down, or it was going to, trade from this change of character, retrace, and continue back up. And so a few candles later, fast forward, you can then see price does try to rally, and it does try to come up into this zone and break above it. But this wick symbolizes that we actually have a failed higher high. And so this is actually a textbook setup that I watch for in trading, especially on the 15-minute chart, because it symbolizes that this was just a liquidity grab. And then the cherry on top is that price comes back down and gives us a 15-minute change of character. And so a change of character, all it is fractal structure changing trend, and basically meaning that the lower time frame swing structure is changing trend, and we're getting ready to continue this overall bearish down move. And so now that we have this lined up on the 15-minute, basically what we can see or expect, our expectation is that because price gave us this change of character right here, for those of you who don't know, price traded down below this old low and wicked it. This change of character is in the is pro trend to the trend that we are watching, and the trend being a bearish trend. So basically, just to like recap on that, I know that may not make a lot of sense. We have a pullback, continuation, 15-minute breaker structure. Price trades down a little bit lower, wicks it, comes back up, and gives us a change of character, which implies that a pullback in this zone trading up into this supply area is either happening or it just did that and it's already done. Something like that. Change of character just means that this pullback in this direction is beginning. At which point it retraces back down and tries to rally again, fails to close above it, and gives us a change of character again, pro trend. So this is a pro trend change of character, which implies that it is very likely, or our expectation becomes, that price is going to trade back into this newly created supply zone, into this newly created leg, and then continue selling off with the trend that we've already been experiencing, which is a bearish trend. So at this point, let's go ahead and drop down to the 5-minute chart, and it becomes even a little bit more clearer as to what we're trading here. So as you can see, 15-minute change of character is a 5-minute break of structure. So the 5-minute break of structure, as we know from previous videos, I do have a free course that goes over all these basic concepts of smart money concepts. A 5-minute break of structure would give us the expectation that price is going to trade back and retrace into the zone before continuing in the same direction as the break of structure. So we then can expect price to retrace up and mitigate a supply zone and then continue selling off pro trend. Okay, so let's go ahead and drop down into a little bit lower time frame where things actually become crystal clear as to what we are doing and what we're accomplishing here with our trade. So at this time, I was actually trading the 1-minute chart, looking for my entries. I had already had everything I went over was already in the back of my mind. And I just had my 1-minute charts open and my marking here for my supply zone. And that's what I was looking for my entry. I had my pending order set right here on this 1-minute supply zone. Like I said earlier, I noticed this little candle here, but what I'm always favoring is the extreme of the supply zone. And the most refined supply zone that I can find in a leg is where I will put my pending order. So I have my pending order at the bottom of this box, a stop loss right above it. And you can see, right, like I said earlier, at 9:32 New York time, it was actually wicked into that box and got the wick entry. And it then sold off to that new low, okay? And also during this time, I did add to my order right in here. I actually added to my order to get, basically double. I don't actually risk another full 1%. I have my own strategy that I follow when it comes to adding orders, but basically making more than just the original order by adding to this and following the same exact strategy that I'm going over with to actually add, which I'll break down here in just a second. So right at this time, I did get the sell limit triggered with my stop loss right above it. We can see price sells off, and there's no structure that actually broke here. So what I was waiting for was the extra confirmation that the trend was actually going in my favor. So if we actually use the replay tool, this is actually a little bit more realistic to show, kind of what I'm seeing or what you are seeing in a live market if you're watching this. If you were watching this live. So at this point in time, you would have gotten wicked in, but this is obviously very scary to trade. So you don't necessarily have to set your pending order right here. In my opinion, this is a very high probability setup, but I get that like not a lot of people are going to want to trade, opposite direction of all this momentum right here. And so if you wanted to wait for a few more confirmations, let's go ahead and go over that and show you those confirmations that allowed me to add to my order since I had a pending order here. So if you're watching this trade live, the charts will be doing this, and you can see, okay, immediately price does go in my direction. However, there's no structure, there's no confirmation yet to like to give us that confirmation entry. So nothing has really broken structure. Nothing has really happened yet to kind of prove to us that we're right. Could just be a simple reaction, and price could actually trade right back up to it and sell off, or excuse me, wick the stop loss, or can just continue, in reverse from where we're at right now. So if you wanted to wait for those confirmation entries, you could simply wait a few candles. You can see price actually pulls back up into this zone. I think a few more candles. Yep. And then we come back down. We're at this point here. We do have another 1 minute break of structure. So I'll just mark that here. And after this break of structure, price trades back up into this supply zone, which at this point in time was when I actually was adding to my order. But if you were waiting for a confirmation entry, your order could just be placed right here. So you don't necessarily have to always do the pending orders at the extremes. You can wait for confirmations, and that confirmation is in the retracement, the failed higher high. So price fails to trade above this, and it then breaks down and breaks below this low on the 1 minute chart, retraces back up, which you'll see here in a second, into that supply zone, taps you in. So your pending order would be on the low of this box, and your stop loss would be on the high. One more candle, it does trade in there a little bit deeper into the supply zone, and then we have the sell off after that, and price within, I think we said 30 minutes or so, does sell off and clears this low. So now the next question you have, I'm sure, is how do you actually know where to target, and why wouldn't you target this low? Why wouldn't you target this low? Why are you targeting this low for that 8R gain? And let's go ahead and go over that now. So basically on the 4-hour chart, this is the 4-hour low that I'm targeting using the 15-minute time frame. And so this is something that I go over really in depth in my course. If you want to learn how to catch trades like this and learn technical targets, be sure to check out the links in the description below, because I do talk about this stuff in depth inside my course. And so just to touch base on this here, using the 4-hour chart, we can see that at this point in time, so we entered somewhere inside this 4-hour candle, where these drawings were on the lower time frame. We can see though, at the point in which we entered this trade, price had not actually traded below this low. So let me just draw this really quick. We have a run up, a pullback, a failed higher high, and then we have a low right here in the market, a rally up to mitigate this zone here, and then a continuation. And so all we're doing is just targeting that 4-hour pullback and using that as our target, as our main target to get into with, using that as our main target to take profit with in the market. So let's go back down to the 15-minute. We'll leave that drawing on there so you can see exactly what's happening here. All we're doing is we got in at this, right at this wick on this 15-minute, and we're using this 4-hour low right here. So if you drew this line all the way over from this low over to here, we're targeting that 4-hour low. And at this point in time, as soon as price breaks on the 15-minute chart, we then now have an entire swing structure on the 15-minute that we can then look to take trades from when price trades back up into it. So this obviously is a lot to take in, but I just wanted to show you guys, like, after studying and after practicing and after trading for a while using smart money concepts, this all just becomes like a second language. But you have to take the time and the energy to invest and understand what's actually happening. Now, if you didn't understand, multi-time frame analysis, you didn't understand the 4-hour low that I'm targeting down here, you also could just simply target this next low here, or your swing low down here. It's totally up to you, and it depends on your trade management and your understanding of multi-time frame analysis. But in this example, I did actually close 90% of my trade, 90% of my volume, and I left a 10% runner on, which it is now actually retracing back up, but left 10% on so that, like we talked about earlier, we can see if price actually does continue down into these lows down here and clear this low And essentially, just to wrap that up, we are trying to catch the higher time frame trends using the lower time frame price action and entries, which is something that happens day in and day out. And so if you want to take advantage of this, if you want to learn how to do this, if you want to learn to speak the same language that I'm speaking, be sure to check the links in the description below, because I do, like I've mentioned, have a course, and the course is full of gold. So until next time, thanks for watching. Be sure you subscribe to the channel, and we'll see you in the next video.